Hey everyone, this is Elijah Johnson with FinanceAndLiberty.com, and back with us today is David Morgan from TheMorganReport.com and SilverInvestor.com. Thank you so much for joining us today, David.
Elijah, my pleasure. Thank you.
All right, so I first wanted to discuss a little bit about the precious metal markets. Since the last time we had you on, I think probably about 3 or 4 months ago, what do you see has been happening in the precious metal markets?
Well, we've had a lot of, washout, I think, in the silver market particularly, but gold as well, in the latter parts of last year. And I think we've bottomed. I think we're grinding higher. I mean, today while doing the interview, both metals are off rather significantly, but they're off their lows. And there is more interest in these metals because the world of uncertainty continues to grow with, I'm sure, a lot of things that we can talk about later in the interview. But the idea that there's an underlying distrust in the financial markets, and it's pervasive. It's not only in the currency markets, in the bond markets, in the stock markets, even in the real estate markets, that there's not a really safe place to go other than the precious metals. And most people that know that are already invested in precious metals. So what will take place on the next major leg up is there'll be people that are slightly aware of it or contemplating it now, and people that are totally unaware that wake up quickly to the reality of what's going on throughout the entire global financial empire. And they will seek the precious metals in almost any form, particularly physical form, for those that are really understand the depth of the problem. So I'm still very bullish. Fundamentals haven't changed. They've only gotten better. Certainly technically, looks like we've bottomed, and from what I said, at the last interview, I'll stick by it. I think the bottom's in. I think we're going to, grind higher here for a while.
All right. And I know one of the reasons that it seems like we're going to possibly go higher is you've mentioned that the Silver Institute projected about a 27% increase in industrial demand for silver over the next 3 years. Did you want to discuss about how that might impact the price?
Well, demand is demand. I mean, the silver market doesn't sit there and think, well, is this investment demand or is this monetary demand? So increased demand obviously puts price pressure to the upside. And most industrial applications, it's a small quantity, so it's price inelastic, which means that if you're building a refrigerator that sells for, let's say, $1,500, and you've got $12 worth of silver, if the price doubles and it costs you $24 worth of silver, it really doesn't matter to the refrigerator manufacturer because they're going to pay you that double the price without any question, because it's still a component that's absolutely irreplaceable, absolutely essential, and it's really a very small part of the overall cost of the product. And that's true. That's called inelastic on the demand side. Most applications are like that. Even solar panels, which use silver in a rather robust way, is significantly down per panel than what it was, say, 5 years ago. So that will be an added feature, sort of like a company, a corporation that looks out in the marketplace. Their stock is doing quite, well, let's say, and they decide the best place to invest is not in another company or not in the bond market, but to buy back their own company, buy back their own stock. That's sort of what takes place in the silver market when you think about it, because the industrial demand is probably there no matter what. Good times, bad times, whatever. Yes, it does ebb and flow, but overall the trend has been significantly higher over the last decade or more that I've been, on the internet talking about the virtues of silver investing. For example, if you go back about 12 years, the overall demand from an industry was 35% of the total silver market. Now it's about 55%. And during that time, the total supply of silver has gone from about 800 million ounces to 1 billion ounces. So the demand has gone up in percentage terms, and the percentage of the silver market has increased over the last decade because there's been more silver mining and base metal mining activity over the last decade. So definitely it's something to pay attention to. Will it control the market? Not necessarily. The real demand side that moves any market is what's called at the margin. And at the margin, you're talking investment demand. So it's really monetary investment demand that will really have its day in the silver market. But nonetheless, as I said a moment ago, and I'll repeat, you still have this kind of stock buyback program that underlines it all and gives it strength, because when the silver market kicks in, because there'll be so much demand on the monetary side, which means the industrial side will start to get squeezed. So they'll put in more demand to probably hoard, if you want to call it that, or warehouse supply, so they can keep making their refrigerators, as the example I used earlier. And that will force the price higher, which will feed back to the investment side. Will go, oh my goodness, it's going higher, which will force the industrial side. So you can see this ping pong back and forth, where all of a sudden it starts to spiral upward and upward. And that's the kind of event that I'm looking for probably in the 2016, 2017 timeframe.
Definitely. And I know your colleague, David Smith, he said that the $26 level for silver is really a key level. He said that if we build a base at $26, then it can go up to possibly $35. And then once it builds a base there, then it can go up to $50. He was expecting that to happen, in his opinion, in the next year to 18 months. What is your perspective on that?
Well, David works with me, as you know, and I'm free market, and he's entitled to have his opinion as much as me. First of all, I agree with the $26 level. That was key support for a very, very long time. And so now it'll become resistance. So it's key to see it work its way through the $26 level. I'm not sure it needs to build a base there, but it needs to get through that level and maintain above that level. So if you want to call that base building, that's true, regardless if it's around 26 or 27, as long as it's above the 26 mark. And then there's very little resistance above that, as he said. So my only, quibble might be time frame, and no one gets it right all the time. Certainly my tops calls on the top have been almost perfect. My calls on the bottom certainly have not been. I've been late, not late, excuse me, I've been early on the bottoms. I thought that the 1817 intraday low in 2013 was the bottom, and I was right. For 14 long months, I was correct. And then, that one trade that took it under the $18 level proved me wrong. And certainly under that now as we're doing the interview. So back on point, I think his general idea is correct. It definitely meshes with mine. I might argue it's going to take a bit longer than that. I think that if we're going to get to 26 this year, I'll be happy. I hope we go far higher than that, but that is a key area to watch. It's equivalent to the 1550 level in gold. So we'll be watching them both. I think if we saw silver breach that level first before gold did, that would indicate to me that silver's leading again. And when silver's leading again, what that means is that there's more uncertainty in the marketplace, and that it's going to happen faster, and that there'll be more, let's say, movement quickly. In other words, it's sort of a strong indicator that things are unraveling fast if you see silver starting to lead gold in that manner. Certainly on a daily basis, one might lead or another type of thing, but I mean in the general trend. So that's something also to pay attention to. And of course, lastly, I guess, without asking, the gold-silver ratio. We want to see it narrow, which it will, but if you see it narrowing rapidly from the high 70s down to like the low 60s in a very short duration of time, in other words, silver outperforming gold rapidly, then that's also a key to wake up and pay attention, because what that means is something is going on that the market sees that maybe the average investor doesn't see. That means you better either get your silver position or at least pay attention to your holdings that you have.
Definitely. And I was wondering if we could talk a little bit about the investment demand you were talking about earlier. The European Central Bank a little while ago announced, the QE program, and also we've seen negative interest rates in some countries. What is your perspective on how the currency war currently that is happening will impact investor demand for silver and gold in that case?
It will put huge demands on them that already exist. I mean, first of all, there's an infinite demand for money. I mean, most people don't think of it in those terms, but when you really thoughtfully address yourself about what money represents, it really represents something, and it can be anything. It could be a good, it could be a service, it could be land, it could be a stock, it could be, a travel vacation. It could be anything that you are giving up now for purchase in the future. And it represents security to most people. So especially older people that are looking to retire or are retired, money is a way of saving for a future purchase that you're putting off now. And people want stability. They want certainty in their life. And of course, the thing that's the most uncertain is a paper currency because they've all been destroyed. And so what you're seeing now with the currency crisis or the currency wars is that there's huge instability between the currency markets. And this is the event that I've long predicted, along with others, that would be taking place before you see the massive run to gold. Now, the run to gold, I think, will actually be bigger than any run to gold we've seen in modern times. Certainly it will be bigger than what happened in my lifetime, the last bull market from, say, the early 70s that accumulated January 21st, 1980. So that's, to me, going to be like a warm-up compared to what's going to happen this next time, because one, it's a global market, and two, it's going to be a global currency crisis. So all the underlying fundamentals of trusting this quote-unquote money or currencies is going to fail, and not necessarily all at once. I mean, you see the ruble situation, then you've got a problem with the yen, and you got a problem in the Eurozone, then you got Greece is going to back out, now the Greece is going to stay in, then you've got, Ireland's got a problem, then, the Canadian dollar's falling so much against the US dollar, and on it goes. But it's really almost a distraction from the aspect of the underlying fundamental fact that all paper currencies are backed by nothing but the air of politicians and central banks telling us how wonderful they are.
Definitely. And I was wondering what your opinion is on what the Fed is doing. I mean, it seems like they've backed away from their quantitative easing program amidst this currency crisis that's going on around the world, and also, although rates are still very, very low, they're thinking of possibly raising rates this year. So how might that play in with the rest of the currency war that's going on around the world? And would gold and silver still rise if the dollar just keeps on rising and rising against all these other currencies?
Okay, well, I'll address the first question first and the second one secondly. But first of all, and I'm not a Fed supporter. I mean, anyone that's met me for more than 12 seconds knows that. But actually, in this case, I have to give them a little bit of credit. And I'll say a little bit. Because if it were me, I would definitely do what they're doing, which is observe the market and see how much tolerance it can take with what's going on in all the other currency realms, and leaving the dollar alone and seeing what pressures are put into the marketplace. So I think actually to kind of take a wait and see kind of an attitude, and maybe just, say something that they either believe or don't believe, and just waiting is not a bad strategy at this point in time. But they've done so much damage up until now, it's kind of a moot point. But, we're in the here and the now, and, the dollar is strong. What's interesting is that gold is rising against the dollar, even while the dollar is the strongest kid on the block right now. And that doesn't surprise me. I've done other interviews, and I'll try to be brief because you can listen to other interviews, but it has to do with the structure of the monetary system. And the stablest form is real money, gold and silver. But as people seek liquidity, or seek that safety that I talked about earlier, they come down the liquidity tree into what they perceive to be very, very stable, which would be a paper currency. And at this time, it's the US dollar. So you see a lot of thinking of people that aren't thinking very deeply that the dollar is a safe place to be. So there's a lot of pressure in the dollar, therefore the dollar is strong. But the smartest money is moving into gold, and that's why gold is moving up vis-a-vis the dollar, even though the dollar is getting stronger. So that's a very clear signal, like I talked about, the one about silver leading gold. The one that shows that gold is going up at the same time the dollar is going up is a leading indicator that the game is starting to unravel even further, because the smartest money is still moving into gold quietly, while the dumb money, let's call it, that is seeking safety and thinks that they're doing the correct thing and moving to the US dollar.
Hey everyone, thanks for watching. That's it for part 1. Make sure to click here to subscribe for free so you'll be notified when part 2 is released. This video was brought to you by ReluctantPreppers.com. Click here to watch Reluctant Prepper's interview with David Morgan. Now for a clip from the interview.
The fact that governments fail is the point that most people cannot conceive. They conceive of a bank failure, they conceive of a business going out of business, but they cannot conceive that a government can fail. Yet history teaches us again and again and again that governments do fail, that this one is failing, and that you cannot rely on anything coming from them to be, one, truthful, or two, to your benefit.